We're inside Bitcoin's NYC. I'm Perianne Boring, reporting for Money and Tech. I'm joined by Marc Hochstein, the executive director of American Banker, which is a commercial banking executives publication. Can you tell us a little bit about your reader base and what they're interested in hearing about as it applies to Bitcoin?
Yeah, American Banker is the daily newspaper for the banking industry. I think that a lot of people in banking are interested in Bitcoin. A lot of them are curious about it. A lot of them are scared of it. A whole lot of them are scared of it. There's a great reluctance on the part of most depositories to bank Bitcoin-related companies.
And you've mentioned that Bitcoin could disrupt the commercial banking industry. So how does that apply to your reader base? And you said a lot of them are scared of Bitcoin. So what are you seeing people, questions being brought to you?
Well, I mean, scared of Bitcoin in the sense that they're reluctant to take on Bitcoin startups as clients. Basically, they see a lot of regulatory risk in that area, a lot of compliance risk. There's a feeling, even among the banks that are open to serving these clients, they think that the rules are not fully clear enough, so they're reluctant to take on a whole lot of clients in this area. And it's really got to do with anti-money laundering issues, know your customer, those kind of things. You know, Bitcoin, you and I know that Bitcoin is not totally anonymous. You and I know that there's the blockchain and there's this record of all transactions, and it's actually quite transparent, but it got this reputation early on of being the anonymous currency, and every time you see a headline about Silk Road or Liberty Reserve or one of those kind of things, I think it just makes them a little squeamish.
Right. And we saw this with the internet too. The early days of the internet was plagued with all sorts of bad stories. Do you think you see any parallels here?
I think that's a great parallel. I mean, I think that Jeremy Allaire from Circle said it in his keynote here, that Bitcoin today is a lot like the internet in 1994. You know, it was kind of like the Wild West, and that's good. I mean, and that's not totally a bad thing. You know, that means that you can innovate in this space without asking anyone's permission. You know, Tim Berners-Lee did not need anyone's permission to create the World Wide Web. He just went and did it. And Bitcoin is this decentralized protocol that anyone can build things on top of right now. And there's a lot to be said for that too. But again, because you're involving money in it now, it's not just bits and pieces of data, but it's actual financial transactions. Makes it maybe a little bit more complicated.
What do you think it would take for commercialization of this space to bring in these institutional investors, such as American Express or JP Morgan or Goldman Sachs? Like, what do you think it's going to take to bring in those types of organizations, industries into Bitcoin?
I think the bankers will tell you they want clearer guidance on what their responsibilities are in terms of know your customer and AML. And so I think that's going to be a real issue before any of them take the plunge. You know, maybe it could be that some bank decides, well, we're comfortable with this risk, and because we can be the only game in town or one of the only games in town, we'll start being the Bitcoin bank. They'll charge for the risk, but we haven't really seen anyone step forward in that way just yet. But it's plausible.
And you interviewed Silicon Valley Bank is one of the few banks that is offering services to Bitcoin companies, and they told you they're not offering services to any more. They're not taking on any more Bitcoin clients at this time. Can you talk about why that is?
You know, that was a really interesting interview, and the reason was they wanted clarity. They said that there's FinCEN guidelines that came out more than a year ago, but the federal banking regulators, haven't really made it clear to them, and this is as of a couple months ago, how far the financial institutions' responsibilities go in terms of monitoring the customers of the bank's customer. So if you go and take $100 out of an ATM, that's going to be a blind spot, and everyone recognizes that. You can't trace cash. But if someone exchanges fiat for Bitcoin at an online Bitcoin exchange, well, there is the ability to trace that customer with what they do with after that. So the question is a bank responsible for following their customers' along the blockchain? And they just want to know one way or the other, what is the answer to that? I think it's sort of a little creepy and terrifying to think about being watched that way if you're a Bitcoin user. And so I'm sure that a lot of Bitcoin users would object to the idea that it's up to the bank to follow them their every transaction. But the bankers just want to know one way or the other. Is that part of my responsibility?
We know regulatory clarity isn't necessarily present in the commercial banking industry either. Dodd-Frank was passed into law and has not been fully implemented yet. There's so many ways those regulations could be played out. Do you think that there's maybe a double standard here?
A double standard? Well, I think that, yeah, there definitely is. Look at HSBC, right? Look at the amount of money that was laundered through HSBC and the relative slap on the wrist that they got. They had to pay a large fine. They had to be humiliated, but no one got criminally prosecuted. And a harmless little guy like Charlie Shrem, he allegedly laundered $1 million. That's an important adverb, by the way, allegedly. Laundered $1 million as opposed to $1 billion, and they throw the book at the kid. So it's not fair at all. Even within the banking industry, if you talk to community bankers, they feel like there's a double standard, that the too big to fail institutions get light treatment, and community banks just get piled on with regulation after regulation. So no, it's not. There's definitely a double standard, and it's unfortunate.
Thank you so much, Marc Hochstein,